Hi, my name is Nawaz Ali, and today I'm going to represent auditors and corporate governance along with all other five group members. So we'll start with external auditing. External audit is the most important examination conducted by an external auditor that is very useful for the users of accounting information. To provide an external audit, an auditor needs to analyze the internal control for an organization, whether they are working as they are described to or not. Internal control can be well worked by the implementation of the recommendations provided by the Corporate Governance ASX as per 2019. What is corporate governance by ASX? Let's have a look at that. It is a set of rules, systems, processes, and relationships as a framework that defines the rules and regulations that should be followed for the governments and ongoing of an organizations. It is the primarily duty of directors and managers to imply the rules and regulations that are solely recommended by ASX governance. ASX governance has provided 8 principles that can be followed by any organization in order to work according to their recommendations. So let's start with those principles. The first principle says solid foundations of management and oversight. This principle completely looks at the roles and responsibilities of employees that are directly or indirectly connected with the organizations. Every listed company should have a set of rules that describe the job descriptions and their duties and all the responsibilities that are given to employees at the time of their hiring until the finish of their tenure. The second principle is an effective and value-adding board of structures. Every listed company should have unbiased and a chaired committee led by an independent director that should be appointed by all the members of the organization, and that can lead the system onwards. The third principle is a lawful, ethical, and responsible corporate culture that describes the rules and regulations according to ethics, rules, and law following of the companies. There should be policies regarding no favorism, no bribery culture in the organization, and its consequences should be told the employees in their employment contracts and agreements. Fourth principle of ASX corporate governance is safeguarding the integrity of corporate report. It is that the disclosure of companies' information should be protected by companies' ethics. The fifth principle is timely and balanced disclosure. The company's financial information should be disclosed well without any mistakes and in proper manner to its users for all the stakeholders, because they use this information to make decisions whether they want to work with the company or not. Thank you very much. Now I would call my next colleague to continue.
Now I would like to continue the remaining parts of principle and recommendation. Let's start with respect the rights of security holder. The listed companies should disclose all the material information through their website. And continue with next one, recognizing and managing risks. The company should disclose whether it has any internal audit function and what function and role it performs for risk managing. And the last one, remunerate fairly and responsibly. The company should disclose all the policy of remuneration of non-executive and director and member. Now starting with tax 2. These are the list of effect of full adoption of principle and recommendation. I'll just explain overall. So let's start. Director and management will be well informed of what it is to be done and what not to be done. There should be a good combination of executive and non-executive directors in the board of the independent directors. Executive director will be able to bias decision. If the company has a well-established code of conduct and core value, it would ensure entity throughout the company. There should be proper implementation and corruption policy ensure lawful conduct by every personnel within the organization. All the financial statements are prepared in accordance with the financial reporting standard and should be free from errors and external audit. By disclosing information timely, it enables management to avoid any types of penalties due to non-compliance of disclosure. The company should hold every meeting within the participation of the security holder. They would realize the importance in the meeting and can provide valuable suggestions. The development of risk management framework helps the directors and management to avoid the risks of business, as Noah says like the same, and form corporate strategy, as well as the interests of the directors and security holder can be aligned. Thank you. Now,
Hi everyone, I'm Binda and I'm going to present my part in the assignment that's about auditor risk assessment process. The auditor risk assessment process begins with the understanding of business environment and the auditor performance for the understanding of material misstatement in the financial statement that is caused by fraud or error. So the auditor has to make observation, inspection, and internal inquiry with the management, individual and internal auditors of the organizations. Further on, he can go with the analytical procedure, and for this, the auditor has to take consideration on 5 aspects of business entity, that is relevance, industry, regulatory and other external forces, nature of entity, the entity selection and application of accounting process, the entity objective, strategy and related business risks, and measurement and review of entity's financial performance. And after having all these aspects, the auditor has to rely on the internal control of management integrity. If he has doubt in this process, then the risk would be high and the auditor may decline the audit engagement. Likewise, if the auditor found there is positive impact in the business entity that use the principles, then the internal control is operating efficiently and the audit risks would be low, and that will affect on auditor process. Thank you.
So I'm going to explain about the second point of task 3, that's audit approach. So the auditors are responsible to choose a suitable approach from the options available for the design and operating effectiveness while maturity of governance arrangement within the organization. Using the risk-based approach, auditors would be able to identify the risky areas where material misstatement can be found in the financial statement. Also, auditors would be able to focus on nature, timing, and extent of audit procedures. Auditors will be able to plan the effective allocation of resources to the risky areas. There are 6 types of audit approach. Some of them are case studies, surveys, observations, and all. Thank you.
Okay, I would like to start with the audit strategy. Here I will explain how the adoption of corporate governance principle influences the audit strategy. Analysis of companies' adoption of corporate governance principle allow the auditor to identify the risky areas, and it becomes easier for the auditor which audit procedures to be performed in the risky areas, either test of control or substantive procedures. And information regarding client's entity, its surroundings and its business risks should be acquired to create an audit strategy, which later can be used to develop an audit plan. An audit strategy is based on various considerations such as the direction of the engagement, timing and scope of audit, preliminary engagement results, nature of resources, communications, reports, and the significance of the team engagement. An audit strategy can vary from lower level of assessed control risk to predominantly substantive approaches. Test of control used in risky areas allow the auditor to reduce dependency on substantive approaches, and it also saves the time devoted to substantive approaches. Thus, the proper adoption of audit strategy ensures the better internal control and higher dependency on the internal control by the auditor. Now, thank you.
Hi everyone, I'm going to present about the audit evidence. So basically the audit evidence refers to the information obtained by the auditor in arriving at the conclusion on which the audit opinion is made. So the auditor should obtain the sufficient and appropriate audit evidence to be able to draw the reasonable conclusions on which to base the audit opinion, which can be done by the proper adoption of corporate governance, which enables the auditor to get the effective evidence with the help of internal control system and helps in reducing the external source of information, which is more time consuming. The quality of audit depends upon the proper audit evidence, which can be done with the help of different audit procedures like inquiry, analysis, and many more. So to sum it up, a good corporate governance helps in making the effective internal control system and also helps in managing the risk of the company for the employees and the company, and also helps the members to get free from any kind of biasness. Thank you.